runs financial services practice out in Asia, and then since then has gone into the private equity market and has run. He runs businesses all over the world now that he's personally involved in from a private equity point of view. So what I would say is that Osama and Michael, they tend to bring the trader perspective because they're in a trading environment, whereas brings the investor perspective, looking at the value. So this should be an interesting discussion because there's two sides of the coin. But if it's a fairly relaxed discussion, and if you guys have some specific questions in relation to this, we'd love you to table those as well to the group. But I thought we'd just start off by getting each of the team to give their thoughts on the current inflationary environment, what's going to happen with the PEG in terms of what the likely outcome, the likely solution might be. Michael, did you want to kick us off? There is a microphone.
Yeah, hi everybody. Well, I think it's quite interesting. Today, as you know, we have our friends from OPEC meeting next door in Abu Dhabi, and there again, basically, this morning in New York, oil prices are up at another $2 per barrel, and the dollar is actually rising in the currency market. And it is very interesting when you look at what Brad was saying, this whole issue of inflation, currency revaluation, and of course it's here. Basically, it's all about oil and natural gas. So this triangular relationship is very interesting, but when you listen to what OPEC said, look, we're not going to cut output. And this is again a clear signal from OPEC saying, look, okay, the GCC countries most probably not going to revalue overnight, like a lot of people have expected. I mean, as you know, I work here for HSBC Private Bank, and you wouldn't believe in the last 2 weeks, everybody and their dog was sending us almost $100 million until Treasury said, look, we can accept the money, but tell people we can't pay you any interest because we have too much demand for dirham, right? And of course then our friends at the central bank and the UAE government got very worried about this, and then they came up with a very strong statement again last 2 days saying no, there is no revaluation, and that the UAE won't go alone, right? But then 2 days later, OPEC is telling us, look, we're not going to cut oil, we're not going to increase oil supplies. So that means that oil most probably, yes, will go to $100 plus. So again, it's this relationship between oil and the dollar, which I think is key. But when you look at the implications of that, it most probably means for all of us here who have to manage their own money, that's still basically shifting money out of the dirham is still most probably the right trade. Because here, as you know, having the money in any local bank is actually a losing proposition. Because basically, deposit rate is only a fraction of what inflation is here. And this is also perhaps the argument why the equity market is going up. This is quite interesting again today. When you look at the local stock markets in Dubai and Abu Dhabi, it was net buying across the board. Everything was green. Again, people buying local assets because they know that if the revaluation would not happen, then we have asset inflation here basically. So that the government to some extent lets the asset market revalue instead of the currency. And I think this is again a key investment implication for everybody for 2008.
Well, I try to be more simple than everybody's been watching now what's been happening in the past few weeks, we can say. There are challenges actually which everybody can notice and see, and even you can suffer some of them because the inflation is touching everybody's pockets, and either it is the operational cost of the companies down here, or the overhead, or the push to raise the wages for the employees. At the other side, the GCC countries, they have decided at one time that they would go for a single currency by 2010. This ends up to like a vague picture right now. There's no clear decision about what to do. This added up to what's happening down here. I see a vague situation taking place, creating such speculation on the currency. Different statements and comments from either the governor or from other political decision makers, not in consensus with each other, pushing the market down to more speculation. It becomes a speculative market, And this is what happened lately in the past, like 1 week, within even the physical currency, and maybe most of the people who be reading in newspapers, they saw that in some exchange houses, because we are coming from exchange house, they were selling the US dollar on a much cheaper, buying the US dollar much cheaper rate. One of these main reasons, I mean, this created kind of also, bad image about the exchange houses being using or making use and abusing the customers. Was not the reason. One of the things is that most of these exchange houses, they have current accounts with central bank. They took these banknotes, US dollar, and the central bank refused to accept, which also pushed them to be on the safe side and to reduce. Everybody was thinking that the summit and Doha would come with the decision whether to go for revaluation on a collective basis, or to go for a basket of currency, or at least to take a decision. And not taking any decision, the pre-conference to the summit of the finance ministers, they went out with no clear decision and not to take this title to the agenda of the summit. All these factors, including that I think this is an emerging economy down here. Maybe the US dollar has served for some time, the economies are being only depending on the oil revenues. But now we see most of these economies tend to go to diversify their economies and the GDPs. And Dubai is an example for that issue. So just being along with the dollar is not beneficial, I believe, any longer. There should be kind of rethinking with thorough study to see the cons and pros for any solution to be taken. But now the market, if we would speak about the status of the market, more stabilized now, back to normal almost, because certain preventive action being taken by the central bank. But still, the overall situation is vague and not clear.
Thank you. I will take a slightly different tack. What a surprise. I think that there are two simple aspects. One, for non-indigenous people, Dubai is just very expensive, and it's getting more expensive by the day. Now, that is an effect of inflation, which is the bad side. Now, the other side, I think to myself, I've been through it in Hong Kong. How do you get an economy with essentially lowly paid people and low asset values within a period of 25 years to be a very wealthy economy? I'm not ignoring the oil. And inflation is the only way to do that. The two big economic blocs of the world, the US and Europe, have decided that they have reached a level of wealth and well-being and social security and pension that they do not want that anymore, and they are pursuing their anti-inflationary policy recklessly at the cost of everybody else except themselves. Europe would be as reckless as America if it were to be on the unlucky side of having a stronger currency, and they didn't choose that. So I think that the world has, there are sort of three aspects. There are the developed economies which should pursue anti-inflation